Hi, everybody. Hey, how's it going? Which side do you want, Grover?
I'm here.
I'll take the right. This side, right.
I'm looking at that screen.
We don't need microphones or anything? That thing? That's good enough? Really? All right.
Oh, very impressive. Okay, just went to the doctor. My rotator cuff is being annoying.
Yeah, I tore that last year.
Mine was this show.
Oh, we're good. Just waiting for you to tell us to start. We're live. Great. Why don't you start it off, Grover?
Okay, well, we're here with Speaker Ryan, and we're going to be talking on taxes and tax reform and what's going to happen. And if you'd like to post, this is on Speaker Ryan's Facebook, also Americans for Tax Reform Facebook. Post on either. Questions will be put up here, and I can share them with Speaker Ryan. Do you want to say a word of introduction before I toss out a few hardballs?
Sure. So Grover Norquist from Americans for Tax Reform. Thank you. We have interns from here in the House of Representatives. First, let me just say, to begin with, I think it goes without saying, but it's worth repeating, we need to keep the people in Las Vegas in our prayers. We still have a lot of people fighting for their lives. We've got great stories of heroism, people giving blood. It's pretty amazing watching people come together, but let's just keep them in the front of our minds and in the front of our prayers. With respect to this, I think this is one of those once-in-a-generation opportunities, Grover, to reset the American economy to be built for growth in the 21st century. We have not reformed our tax system. The last job I had when we were doing that, I was working the quarter grill at McDonald's. You know, it's the year I got my driver's license, is when we last reformed the tax code. And the rest of the world has passed us up as a country to the point where we now have probably the most uncompetitive tax system in the industrialized world. And what it's costing us is it's costing us jobs, prosperity, living standards, wages. And the purpose of tax reform is to let middle-income people keep more of what they earn, let hardworking taxpayers have bigger paychecks, get us a confident economy, a confident country, and fix our tax systems so that jobs stay in this country. But more importantly, businesses can begin to be built and develop, and they stay in America. Because right now we have a tax code that tells businesses you're better off being a foreign country, or you're better off being a foreign company, and you're better off moving to a foreign country. We can't keep doing that. So that's why fundamental tax reform is so critical. But I think it's important to take a look at the families, the people who are suffering under the current tax code. 90% of people who do their taxes have to get someone else to help them do it. Well, this is a postcard, which is a real form on what tax reform can look like. 9 out of 10 taxpayers will be able to do their taxes on a postcard with this reform. That's why we're so excited about it. It's fairness, it's simplicity, it's tax relief, and it's a reform of the system to make our economy wired for the 21st century to get us good paying jobs.
Speaker Ryan, I'm very excited about this bill because I think it's going to create millions of jobs. When Reagan did some similar rate reductions, we saw 4 million jobs in the first year that took effect, 4 million additional jobs. So the big winners, when people say who wins and loses from tax reform, tax reduction, the winner is the guy who had zero income last year and is making 20 or 25 or 35, $40,000 because he or she gets a job. But in addition to job creation, you're reforming it to be easier to understand. Can you talk about, on the individual side, what happens to rates? And then the other question is the doubling of the standard deduction. What does that mean for somebody who does their own taxes or would like to do their own taxes?
So by doubling the standard deduction, going to $24,000 for a couple, $12,000 for an individual, you basically make it so that you don't need to itemize your deductions. And if you add on top of that charitable deductions, mortgage interest deduction, and the doubling of the standard deduction, that's what gets it so that 9 out of 10 people don't have to fill out complicated forms. They don't have to take days to do their taxes. They can do it in minutes on a postcard. So you dramatically simplify the system, and by closing loopholes, but having a bigger standard deduction, it's a fairer system. People who make the same kind of money, the same amount of money, pay the same tax. So it's fairer and it's radically simpler. The other point is we collapse the rates. We have 7 different tax rates right now. So people who are currently in the 10% bracket because we're doubling the standard deduction, they'll go into a 0% bracket. People who are in the 15% bracket will go down to the 12% bracket. We'll collapse these brackets so that we actually lower people's tax rates across the board. There's a discussion about a fourth bracket for very, very high income earners so that they don't see a big drop in their tax rates, so that the tax relief really goes to low and middle income people who are the people in this country living paycheck to paycheck.
So
who need a break.
The bottom tax rate would be 0.
That's right.
On the first, for a married couple, the first $24,000 of their earnings. And they don't have to...
That's the standard deduction.
Standard deduction.
So we'll find out exactly, we're still working on where exactly that 12% bracket then kicks in. But the standard deduction gives you the ability to zero out your taxes clearly on that, but and not have to take all these complicated deductions, so you have a simplified tax
So no
system.
receipts.
That's right.
And $24,000,
That's
zero
right.
tax bracket.
That's right. And then you can do a mortgage and charity on top of that, which I think are very broad-based tax deductions that are middle income tax deductions that are broad-based for everybody.
So when you're talking about eliminating deductions and credits, we're not looking at eliminating the charitable contribution
Correct.
deductions or home mortgage?
That's right.
Interest?
That's right.
Okay. What's the timetable? What should people listen for
We want to
when
get
they
this
see it
done.
on TV?
We want to get this done this year, so we start next year with a new tax system, so that when you're doing your taxes for 2018, you have a new tax system, so that when businesses are making decisions whether to expand, whether to hire, whether to stay in America or move overseas, in 2018, we want them making the decisions: hire people in this country, expand my business because we're fixing their problems, because we're getting a competitive tax system, because we're encouraging and incentivizing growth and opportunity. So because we believe for the first time in nearly a decade, because of tax reform, we can get this economy growing north of 3% growth. Now, what does that mean to people? We haven't had a 3% economy in about a decade. That means living standards. That means wage increases.
What's
that means
it been growing
paychecks.
on average over the last, say, 8 years?
Yeah, we're around 2%. So we've been growing. We've been growing, between 2 and 2.5%. The difference, in some cases, we were at 1%. So having a 2% economy versus having a 3% economy, it's trillions of dollars of wealth. It's trillions of dollars of money going into the economy, going into paychecks. What it does is it raises living standards, it raises productivity, but more importantly, it just makes us have bigger paychecks, more take-home pay. That's why getting this faster economic growth really makes a difference.
Okay. Could you show that card again for people who may be joining us? We're
Where's
here with Speaker Ryan
Yeah,
talking about tax reform.
You'll put it up on a graphic. That's right.
Okay. Okay, so this postcard, you put down your income, you subtract your standard deduction,
Yep.
and then you have a lower rate than you used to. So
That's right.
every American today who's paying either 10 up to 39.6,
At 10 to 30, it gets lower tax rates.
every rate goes down.
You get lower rates, and you get a bigger standard deduction.
Because I've seen some people confused, and they think that some people have higher rates.
No, nobody has higher rates.
Rates go down for everybody.
Because there's a 10% bracket that goes away. The 12% bracket comes down from where it is at 15. So people in the 10% bracket go to a 0% bracket. So they just get a bigger tax cut. That's the point we're saying.
Okay, well, 10 to 0 is pretty good.
10 to 0 is pretty good.
Okay, and 15 down to 12.
Mm-hmm.
Okay, and then the 7 brackets all go towards something lower.
That's right.
All the way up.
That's right. And then there's a discussion about a fourth bracket for very high income people, whether or not they have lower rates, a lower top rate or not. That's the conversation that the Ways and Means Committee in the House and the Senate Finance Committee is going to be having.
Okay, and again, timetable,
House
people are watching TV. The House is going to do what, then the Senate does what, and then is it over, or do they have to go back together and chat?
So that's a great question. So the House will go first because, according to the Constitution, all tax laws must start in the House and in the House Ways and Means Committee. So the House Ways and Means Committee, in 2 to 3 weeks, will be putting out a bill, probably 3 weeks.
Okay.
And that bill...
Before Halloween,
that's right. Oh, yeah.
the House committee will
Before
have a
Halloween,
bill.
the House will put out its bill. The House will get its feedback, and then we're going to move this bill through the House, send it over to the Senate. The Senate will have their own process in place. The Senate will take that House bill, take it up, make whatever changes they want to. That's the legislative process. Then we go to a conference committee. We reconcile the differences between whatever the Senate passes and whatever the House passes. And the important point in front of this, Grover, is unlike health care, we want to make sure that we are on the same page to begin with. So for the last 4 months, the House and the Senate and the President's staff have been working together on this common framework. This discussion we're having is about that common agreed-to framework between the House, the Senate, and the White House. And they're going to be filling the details within that framework. So we already have an agreement on the framework of this tax reform plan such that we're having this discussion of these details and working within that. That's very important because that makes the process faster. It's because we agree on the outlines of tax reform, it makes getting tax reform done that much easier and that much quicker. So it's House, then the Senate, reconcile the differences, pass that common bill through the system, and the entire plan is to get this done before the end of the year.
Okay. We have a question here from KT. How will tax reform help companies stay in the country instead of moving overseas? You opened with that being a significant problem that the United States imposes on itself.
There are two big ways. Number one, the tax rate on average of companies in the industrialized world is 22.5%. The tax rate on corporations in America is 35%. The top tax rate on non-corporations, that's 80% of American businesses, like pass-throughs, subchapter S corporations, LLCs, that's over 40%. That's 44.6%, the top effective tax rate. So when we are taxing...
We tax small business, not we, the government.
Yeah, the government.
Taxes, federal government, taxes smaller businesses, entrepreneurs, self-employed people higher than they do General Motors.
Than they do General Motors, if that person's successful enough, but which doesn't take much for that tax rate to get kicked up. But also, not only are we taxing higher than General Motors, the government's taxing higher than General Motors, America is taxing all of our businesses, corporations and other kinds, much higher than our foreign competitors are.
China's at 25.
That's right. Ireland's at 12.5. Canada's at 15. England's at 18. The average is 22.5. We're 35 to 45. And so what we're saying is get our tax rates down. Get our tax rates on corporations down to 20%. Get our tax rates down on these non-corporations to 25%. That's a 40% drop in tax rates for the businesses. The other thing is we want to encourage businesses to invest in America in expanding their businesses. So we let businesses write off those investments fully 100% for 5 years. We think that will encourage an investment in America, in American businesses.
When you talk about simplification, that means if I buy a computer or a truck for my company, the business, I expense it that year rather than having the government make thousands of decisions about how long an depreciation schedule is.
It can go from 7 years to 39 years. How long it takes you to write off that investment in your business.
Who makes that decision?
The IRS. And the
Some bureaucrat in the IRS.
Well, in the tax code. The tax code has rules about how that works, and then the IRS polices those rules. What we're saying is, if you're investing in your business and it's here in America, you can write it all off in the year in which it takes place, so you do it. So that helps keep America's businesses in America. The last point I'll say is, the rest of the world has what they call a territorial system, where if a business is successful enough in America that it can sell a product overseas and make money selling that product overseas. I always use Harley-Davidson because it's a good Milwaukee company. Harley sells a motorcycle in Germany, and they pay that German tax, 24%. Well, they have to pay another U.S. tax to bring that money home if they want to bring that money home and reinvest it in America. All of our competitors don't do that. So if Honda makes a motorcycle in Tokyo and sells it in Germany, they pay the German tax, they're done, they bring the money home right away, no tax consequence. So as a result, what America is doing is it's telling American businesses, if you're going to go overseas, you've got to keep your money overseas, because if you want to bring that money back home, you're going to get taxed again. And it puts them at a huge competitive disadvantage. So that's why removing that says, stay in America. If you sell something overseas, bring the money back. We're not going to give you a penalty for doing that. So we're reversing the incentive, which is really designed to move your company, your profits to lower tax jurisdictions and keep it there. We're saying keep your business in America, make things in America, and if you're fortunate enough to sell something overseas, bring the money back and you won't be penalized for doing so.
You were talking about what you were doing in 1986. 1985, President Reagan asked me to set up Americans for Tax Reform to pass the Tax Reform Act of 1986. And to do so, we created the Taxpayer Protection Pledge. We got 100 Republicans in the House and 20 in the Senate to sign a letter to the American people of promise. We will never sign a net tax increase.
Right.
So, and President Reagan said, I will veto a net tax increase. Therefore, people felt comfortable that when tax reform went into this, at the end of the day, into the smoke-filled rooms, that they weren't going to bring out a hidden tax hike, that was squeezed out. And that's exactly what happened. Thank you for making that commitment yourself as a congressman. We have almost every Republican in the House and the Senate who's made that commitment and kept it. Could you just reassure people that when the sausage gets made, nobody's sticking a net tax increase into this bill?
When the sausage is made, at the beginning of this process, in the middle of the process, at the end of the process, this is going to be a net tax cut. This will not be a net tax increase at all. It won't even be close to that.
And Denise asks, you mentioned this quickly, but what will the tax brackets be for individuals?
So it will be 0% like we just decided.
Like 0.
And then it will be 12%, 25%, 35%. That's what I was talking about, the possible fourth bracket for very high income earners. Whether or not they right now they're at 39.6%. The question is, do they drop to 35 or not? That's a conversation that the Ways and Means and the Senate Finance Committee is having.
Okay. As we move forward, give us some sense of what else happens that simplifies things. If you're not having lots of deduction, not long depreciation schedules, the government doesn't have to look at your iPhone and tell you how long it lasts, or your computer and guess as to how long it's good for, which I'm not sure bureaucrats are particularly good at. What other things will they not have to keep track of?
We get rid of the death tax. We think the death tax is is unfair, number one. People pay taxes multiple times on the same dollar in many instances, over and over and over during their lives. We don't think they should be hit with this horrible tax when they die. I was just up at a metal forging business in Aston, Pennsylvania, just last Friday. And this is a business started by the founder in 1931, a guy named Charlie Lafferty. His son Ron now, who's in his mid-70s, runs that business with his son and his nephews. And he wants to pass that business on to his kids and his nephews. He's got 180 employees, good jobs, high-skilled manufacturing, great benefits. But all of their money is tied up in their company, in their high-tech manufacturing robots and CNC machines and the things that they do. The estate tax forces family businesses like that to sell the business or to shrink their business just to pay the tax when someone dies. We think it's unfair. We think it's complicated. By getting rid of the death tax, we don't do that. And we can make it easier for businesses, farms, ranches to be passed on to the next generation.
The alternative minimum tax is another entire setup, which is doubly and triply confusing. That goes away.
We repeal that as well.
Okay.
Because that means it's basically telling people, fill out your taxes twice and then pay the higher of the two.
Mike Johnson, representative, asks, and maybe you could summarize as we come to an end. We've been speaking with Speaker Paul Ryan on tax reform. How is what you're doing on tax reform going to simplify the lives of Americans, both in terms of their deductions and credits and what they face?
Right now, you have a complicated IRS code, 1040 form to deal with. You have pages and pages of compliance, sophistication. We literally, by cleaning up this thing, by consolidating the brackets, raising the standard deduction, you can 9 out of 10 people can fill their taxes on a postcard. It's just that simple, so that it takes you minutes to do your taxes instead of days, and you don't have to pay anybody to do your taxes. We think that radical simplification is not only good for families and workers, but it gets the IRS from being really an agency that is invasive, that is subjective, and making it more of an objective servicing agency for the taxpayers. And that's one of the things that we think is really important. Getting the IRS to respect the taxpayer by simplifying the tax code, closing loopholes, lowering rates, consolidating brackets, gives us a fairer and simpler system, so much that this postcard is basically the form that 9 out of 10 people will use. And we think that that's one of the more important things we could possibly do, because it gets the hassle of government and the cost of government out of people's lives.
Can we make news just before we close? Will we get a tax cut each year that we have a Republican?
I'd sure like to think so. You and I have had this conversation before, so we have had this conversation. So we have this ability to do this in our budget system. Right now we're using the budget, we call it reconciliation, for massive tax relief and tax reform. But absolutely, we intend to go after this each and every single year, because what we can accomplish now, we want to accomplish more and more and more. And we really believe that getting this tax system simplified and reducing people's taxes is good for the economy, it's good for families, it's good for economic growth, so there's no reason not to do this every year.
There's an awful lot of pruning to do, and I just don't want anyone who says, well, we didn't get this fix in, so it'll never happen, to recognize that every year that you have a Republican House and Senate and a president, we'll have a tax bill that we can actually continue to build on the significant changes that you're looking at this year. Grover Norquist here. I run Americans for Tax Reform. We're the guys who ask everyone to take the pledge never to raise taxes. And we've been talking to Speaker Ryan, who's been leading the fight for a number of years to fundamentally reform our tax code to get taxes lower and simpler for all Americans. Thanks for joining us. Thank you.